Okay. Good morning, everybody. This is the live market open for Wednesday, July 20th. I'm Yohay, Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Rate. Hope everybody's doing well. As always, we'll talk about what's going on recently in markets, talk about various charts and levels, and today we'll feature a few previews. So as usual, we'll preview the next week at the end, but we also have a big event this week. It's the ECB, European Central Bank, as well as the special report in the UK, special PMIs. So we'll also do a preview about that. Anyway, I'll be glad to hear your questions. If you cannot see the chat box alongside the video for any reason, please go to the address here, tlk.io/fxrate-live-video. Okay, so what are the main themes in markets? Well, last week we had some sort of more positive atmosphere. We had more certainty in the UK. We have a new government there. Theresa May entered 10 Downing Street. And in general, the mood was better, but now reality bites once again. Worries about global growth. Yesterday, the IMF, the International Monetary Fund, cut global growth forecasts, of course, blaming Brexit. And it's not only in the UK where a big fall in output is expected for 2017, especially also this year, but also in other countries, including Australia, New Zealand, things like that. So that's sort of another bite of reality. Another thing is, of course, Brexit. It's still, well, not only the IMF's forecast, but Brexit. Okay, so we have a new government. And last week also the Bank of England decided not to cut interest rates. So that gave a boost. I mean, they showed more confidence. But basically, the uncertainty about Brexit is here to stay. And this is, well, this is just, as I said, a new bite of reality. So reality bites once again. In general, we're also seeing a stronger US dollar. We had positive figures from the United States. Yesterday, we had good housing figures, building permits, housing starts. And last week, we had excellent retail sales. Okay, so this is all sort of the US dollar is moving up, creeping up, if you wish. A currency that is creeping down is the Chinese yuan. And we talked about the fact that the Chinese authorities are sort of taking advantage of the focus on Brexit, and also the fact that the US dollar is strengthening to weaken their own currency against the dollar, which means, well, their currency did strengthen against some other currencies, so they're sort of making up for that. That's another theme. And of course, everybody has heard the news over the weekend. We had a coup attempt in Turkey on Friday night. Control was restored to the government already on Saturday. Government led by President Erdogan, and it seems that he's clamping down on opposition. There are many doubts. Some people think this coup was well planned by Erdogan himself, or at least that Erdogan took advantage of this coup to consolidate his power, basically suppress all kinds of opposition. Now, Turkey, when this happened, the euro did fall, the yen did strengthen safe haven flows, but it came very late on Friday. And since then, things have been restored. So there's lots of action with the Turkish stock market, the Turkish lira, but at the moment, it's back to the back burner in terms of the impact on the euro, the pound, the dollar, the yen, things like that, okay? Another thing on the news, the Republican convention is underway. Officially, Donald Trump is no longer the presumptive nominee, but the nominee. Okay, lots of political noise from there. So far, no impact on markets. I think that will have a huge impact on markets, but much closer to the elections, September, October, not yet at the moment. So these are the main themes. What does move markets is reality biting, worries about Brexit, Chinese yuan devaluation, and specifically every country has its own. Okay, so we talked about the IMF forecasts. Last week, perhaps it's worth another mention once again. What did we have last week? I mean, we had a long preview for that last week. The Bank of England, Mark Carney, they decided that, well, Carney's in office already 3 years. He said, okay, I'll wait another 3 weeks. 3 reasons for that I see. First of all, in August, they'll have August 4th. It's just 2 weeks away from today, from tomorrow. They'll have more information. We'll talk about this special information we'll get on Friday. Secondly, last week, the BOE decision came one day after a new government was formed. So I guess there will be some coordination with the new UK government, new Chancellor of the Exchequer, Philip Hammond, and which was nominated, last week, instead of George Osborne. So there might be some kind of change in policy. And another reason was that they're not sure that this step will really do any good. Remember, the pound already fell quite a lot. This supports inflation. We had inflation data yesterday, which showed a small tick up. It was for June. So there's no rush to hurry. Carney waited 3 years without raising rates, and he gets a very nice salary. So he can wait another 3 weeks for that, okay? One member did vote for a rate cut. Gertian Ville, well, it's hard for me to pronounce his name. But this week, another member, Martin Wheel, he spoke out and he said that there's no need to rush to raise rates also in August. I believe they will do something, either cut rates or print more money. Of course, that will be in 2 weeks' time. Yeah, inflation is beginning to rise in the UK. And what we did have Brexit related yesterday was a big fall in German confidence. This is the ZOO figure, not the most important. It is important, but it's second to the IFO figure, which we'll get only next week. It went negative. It fell from almost 20 points to minus 6.8. It shows us that German business confidence is much lower because of Brexit. Again, we'll have to see also the IFO figure, but this is a fresh figure for July. It's not in the UK, it's in Germany, but it is important. Today, both Theresa May, the UK Prime Minister, and German Chancellor Angela Merkel, they're meeting in Berlin. Okay, so, and they'll do some breakup talks, as it's dubbed. Okay, I don't think it should have, well, it might have an impact, I don't know, depending on the statements. They'll probably just say that they're going to cooperate and make it smooth, nothing that, we don't know what's going to be inside the room, the details, okay? Okay, before we move to the, let's look at the charts. Well, no, let's continue the data roundup. So I mentioned retail sales in the United States came out on Friday, showed a lot of health. Control group, core inflation, everything went up. The Fed hike chances are higher. Remember, the Fed will not raise rates next week, and probably not in September. We still have Brexit. We're too close to the US elections. But the US economy is showing positive signs, okay? This was the retail sales figure for June, and it shows us that growth in the month of June looks strong. Growth in Q2, sorry. We'll get Q2 GDP next week. Talking about GDP, we had Chinese GDP last week. It came out a touch above expectation, 6.7 instead of 6.6. Of course, nobody believes it, as usual, but, well, so it was sort of more ignored than I had expected. The Bank of Canada went steady. We didn't go too dovish, but on the other hand, for the Canadian dollar, oil prices are beginning to sink once again. Once again, the story remains the same. We talked about it on the show many times. Too much supply, not enough demand, falling prices, okay? And what we did learn this week was that the RBA, the Reserve Bank of Australia, they're ready to ease next month, even though employment was okay and other figures look okay. Next week, we'll have inflation figures from Australia published only once per quarter, and they could weaken, well, they could give the RBA the reason to cut rates in the following week, in early August. So this weakens the Australian dollar. Okay, and also, well, talking about inflation, in New Zealand, we did get inflation figures this week. It came out worse than expected, only 0.4. And the Kiwi dollar, which had a very, very nice rise, is on the back foot once again, sliding. So, and this goes hand in hand with the theme of a stronger dollar. Okay, we talked a lot about news. Now let's talk about currencies. As I said, stronger dollar. As we speak, euro dollar is sliding under the 110 level. Okay, I see 109.60 as support because that was the sort of the post-Brexit low. Well, the second post-Brexit low. The immediate post-Brexit low was 109.05. Okay, that was only a swing low, very temporary. All in all, euro dollar is very much stuck in range. I think now it's surrendering to the stronger dollar, and also anticipating the ECB decision tomorrow, and we'll have a preview about that later on. Okay, so euro dollar finally moving, sliding lower within the range, falling under this round number, 109.60, 109.05 on the downside. It's followed by 108.20 and 107.10. On the top side, we have, I would say, really strong resistance only at 111.90. That's followed by 112.50 and 114.20. But again, the ranges are very, very narrow. Hopefully, we'll have some big shock from Draghi tomorrow to move the currency in one direction or another. Lots of action is seen here on the pound. Don't worry, volatility is here to stay. Of course, this big fall here on the left-hand side of the screen is the big Brexit shock. Then we had a weekend gap. Then, well, we had the pair trading much lower. Here, we had the clearance of the Tory contest when it became clear last week that Theresa May will become PM quickly. So we had the big bounce, and then another boost last week came from Mark Carney. Okay, the no-cut decision of the BOE sent cable all the way almost to 135 to 134.80. Okay, but from there on, we had a slowdown. We had, as they said, a return to reality, biting once again. One of the things that sort of added fuel to the fire yesterday was what we heard from the new Chancellor of the Exchequer, Philip Hammond, former foreign minister. He said that basically the ball is in the court of the Bank of England. The first step should be monetary policy, but also worries about Brexit and the stronger dollar helped push the pair lower. We did see at first the struggle here at last week's low here at 131.20, but now we're under this line, back to the 130 handle. Not going too fast this morning, but the direction remains to the downside. Let's add some lines here. Of course, the lowest level is 127.90, but last week's low, early last week, 128.50 is much stronger support over there. Resistance, well, I would say 133.50 is stronger resistance. The pair does remain choppy, but direction remains to the downside. Because of Brexit uncertainty. Okay. Dollar yen. So in Japan, since the elections the previous weekend, after dollar yen was around 100, we had the elections, we had promises of new stimulus. Ben Bernanke spent some time in Tokyo, and there was talk about helicopter money. What does it mean? For those of you that weren't here last week, helicopter money means that basically the central bank prints money and it goes either directly for government spending, never to be returned, or directly to consumers. Okay, there was some talk in Japan about perpetual bonds. The technicalities is that the government issues bonds with no maturity date, no interest rate, and these are not even sent to market. These are bought directly by the central bank. That's the mechanics. Basically, printing money, and which is an extreme form of monetary easing, far more outreaching than quantitative easing, where in theory money is basically paid back, and far more reaching than just cutting interest rates. Anyway, now on this hope, expectation, more stimulus, more money printing, of course, the yen weakened. So currently we're at 106.10. I would say 106.90 is some kind of resistance, followed by 107.65. Support at 105. It's important to mention the Bank of Japan convenes next week, and I think they will disappoint markets once again, as they did earlier this year, because I don't think they will go outright printing money now before the US elections. This could trigger angry responses from the United States, angry responses from China. They'll probably do it when the attention of the world is elsewhere, and not now. So we might have a disappointment. We might see dollar yen reversing. That means falling back down. And there we have support 103.40, 101.50, and 100, their own number. Remember that post-Brexit, we fell to as low as 99. Okay, but currently we're on higher ground. 106.90 and 107.65 are lines of resistance, support 105. Dollar CAD. Okay, so we did have a strengthening of the Canadian dollar when the atmosphere was better last week. We fell under 109.10, but never went too far. Currently back above 130, grinding its way up. 130.80, some resistance, followed by 131.40 on dollar CAD. So some pressure on the Canadian dollar, even though it did show resilience. But what can it do? Oil prices are much lower. Well, are far off the highs. Currently at 45.40. We were already $1 lower the last 24 hours yesterday. So currently 45.40. Too much supply, not enough demand, and this is felt also in the loonie. Aussie dollar 74.80 at the moment. Okay, we had this was trading up in the channel right here until things got worse. Mostly the RBA's dovish meeting minutes, hinting about a rate cut, opening the door for rate cut in August, depending on inflation figures. So it was the big fall down yesterday from battling the 75 level to the 76 level all the way down. Currently extending its falls to 74.76, support at 74.40, followed by 73.75. Resistance, weak resistance now at 75, and strong resistance 75.30. All in all, lots of pressure on the Australian dollar. I guess this pressure will continue at least until we have this inflation number, and if it comes out weak, then we can have an extension of the fall. Kiwi dollar honeymoon ended. We had quite a surge in the Kiwi dollar, went above 73.30, and from there we had quite a downfall. We're currently seeing some kind of struggle with the previous double top of 70.50, but I don't believe will hold up. Next support 69.50. What we did here from New Zealand is, weak inflation figures, first and foremost. Secondly, the central bank, the RBNZ, thinks of adding more macroprudential tools to curb the house prices in Auckland. So if it does use these tools to cool down the housing market, it can cut rates eventually. And this weighs, of course, on the Kiwi. Dollar Swiss 98.73 at the moment, reflecting the US dollar strength. 99 is resistance, 98 is support. Parity is, of course, high resistance, 96.40 weaker support. Remember, there's lots of manipulation of the Swiss franc by the Swiss National Bank, so don't hold your breath over there. They admitted intervention post-Brexit. Euro Swiss fell asleep once again. Here's the Brexit move. Fell all the way to the 106 handle, now at 108.45, grinding its way down. I don't believe the Swiss National Bank will let it fall too much. If it falls under 108, I expect some intervention. Anyway, we're currently in a very, very narrow range. 110 is, of course, resistance, very round number. Euro pound, we're off the post-Brexit highs, okay, where we crossed 86. Currently just hugging the 84 level. Of course, we're on much higher ground than we used to be before Brexit. The pound suffered a much bigger blow than the euro. Currently at 84, I see support here at 82.70, resistance 84.50. We have relatively lots of movement in this cross. Euro yen, 116.58 at the moment. We're off the lows, of course, the weakening of the yen with the helicopter talk, and stability in the euro, nothing else. 111 is strong support. 118.50 is resistance. I would say that 114.70 is another line of support if we lose ground here. Okay, that was just the resistance line earlier this month. Okay. And pound yen. Pound yen is currently at 138.80. We already fell under 130 at some point. We're currently 1,000 pips off the lows, but still 2,000 pips plus under the highs seen just before Brexit. Huge move here. The pound, of course, suffering Brexit. The yen, safe haven flows. Big recovery thanks to the weakness of the Japanese yen. All in all, this cross, the dragon, the Gepi, one of the wildest currency pairs out there, is seen a huge move, and this move was not missed by SoftBank, Japanese investment company, which announced buying ARM, a British company, of course, taking advantage of the weak exchange rate. As far as I know, the UK government approved this takeover. It's not a huge move in terms of Forex. It just shows us that Forex has also big implications in the real world. Okay, and for those of you that like the dollar index, I talked a lot about dollar strength, so let's put things in some kind of proportion. We're currently at the highest levels since March. Okay, so it's a 4-month high for the dollar index. Of course, you were on higher ground. This is the peak here in December when the Fed raised interest rates, and since then we fell. But you can see that the trend has reversed from the big fall. The trough has been in May. Okay, so since then we're seeing a continuation. This is a daily chart. Strong dollar all in all. Good morning, Ed. Good morning, everybody else here. Okay, so we covered charts. We covered recent events in markets. Let's see what else we have on our agenda today. So on the agenda today, relatively light day. At 8:30 GMT, we have the UK jobs report. Let's look at the calendar. This is basically after the show. So where did that go? Why don't I have this figure? Let me check out the filters here. I don't have the UK. Okay, that explains everything. So here we go. It's the jobs report for the UK. Basically, it's a bit stale because the unemployment rate and wages figures are for the month of May, pre-Brexit. Looks like ancient history at the moment. Anyway, we're expecting unemployment rate to remain at 5%, wages to rise 2.3, stronger than the previous month, excluding bonuses, also 2.3. These are figures for May. Now, the more recent figure is the claimant count change, or basically you can call it jobless claims. That's for June. But also here, Brexit occurred late in the month, so we're probably not going to see a big impact. Anyway, a rise in the number of the unemployed is expected by 4,000 people. This should have some kind of an impact on the pound because, well, it's a jobs report, but because it's pre-Brexit, I don't think it'll have much of an impact, okay? What else we have in the agenda? 2 GMT an hour when we usually get some US figures. This time we have only Eurozone figure, consumer confidence. Let's see if Brexit has an impact on consumers. We're expecting a small fall in confidence from minus 7.3 to -8, but markets are more keen on learning about investor confidence. I talked about the ZOO figure yesterday. Okay, and oil inventory is important for the Canadian dollar, important for the global mood in general. More oil consumption shows more global growth, and less shows less, of course. We're expecting a drawdown. That means a fall in inventories, basically similar to what we've seen last week. What else do we have on our agenda later on? We have on Thursday, tomorrow, the retail sales figure for June in the United Kingdom. This could be a bit more relevant because maybe consumers were in shock because of Brexit and bought less, but remember, it's only the end of the month. So, but it is becoming more relevant. We have the ECB decision. We'll have a special preview about that. Anyway, just the time, 11:45 is GMT, the decision. 12:30, the Draghi show, the press conference, which is the main dish. Also on Thursday, we have jobless claims and the Philly Fed Manufacturing Index, and also existing home sales. All of them, I would say, are second-tier figures in the United States, not like retail sales, which was top tier last week, but they should still move markets. And let's see if these positive surprises continue. Okay, and okay, see a question here just before that. We'll complete what we have on Friday. between 7 to 8, we have the Eurozone PMIs. This could also be Brexit influenced, like the zoo figure, beginning from France at 7, then 7:30 Germany, and then the Eurozone figures. Most important release is the German manufacturing PMI. And then we have the UK special PMIs. Also for that, we'll do a special preview. We'll do first the ECB and then the UK PMIs, and that should have a huge impact. And last but not least, for those trading the loonie at 12:30, we have retail sales and inflation. So a bit less focus on the US dollar in the next few days, more on the old continent. Okay, I see your question. I guess this is GM. I guess this is Luca, or anyway, saying here, pound bashing overdone in my view, watching 130.50 for major reversal potential, inverted head and shoulders pattern with right shoulder and 61.8 retracement at 130. Luca at 130.50. Decent job numbers and positive comments out of German British summit could give some fuel. Yeah, I guess we will hear positive comments from the meeting between Theresa May and Angela Merkel. Anyway, thanks for the chart, Luca. Here is what you're showing us, that you see some kind of support here and a bounce back. Maybe today I can agree with you, but I think that the picture is not positive for the UK economy and does look better for the US one. So yeah, perhaps we'll have a bounce here. Anyway, great chart. Thanks for sharing, and can all learn from your charts. Okay. So thanks for that. Yeah, the positive comments on making sure, let's say, that Brexit is smooth. This can have a positive impact on markets. Okay, so now let's move to the ECB preview. So the European Central Bank convenes tomorrow, July 21st, and bottom line, no change is expected in policy. Why no change? The ECB already did a lot, okay? The ECB has enhanced its QE program. It now buys 80 billion per month since April, announced in March, implemented in April. The interest rate has been lowered several times. Currently, the main lending rate is at 0. The deposit rate, negative -40. Also, last changes were in that big March meeting. And no changes expected now. Another reason for no change is because there are no fresh forecasts. Remember, the ECB convenes 8 times a year, but only in those meetings in March, June, September, and December, it has fresh forecasts, okay? The big questions for Mario Draghi and his colleagues in Frankfurt are, is there any progress on inflation? Recent data does show that, well, headline inflation did turn positive. That's, of course, good news, but that's only 0.1%, and core inflation is still under 1%. So not very convincing, I would say. And the big question, will the ECB do more? I highlighted this. There is a chance it'll do more, not only because of inflation. Well, that's its main mandate, but it might need to do more because it might be running out of eligible bonds to buy, and because of Brexit. What's going on in the bond market? The ECB has a limit of buying bonds with the yield up to -0.40. Okay, so if a German 2-year bond, for example, gives us a yield of a negative yield -50 basis points, the ECB cannot buy it anymore. So it runs out of bonds for buying. Okay, so it needs to buy either longer maturities or enlarging its buying from countries that have more positive bond yields, okay? But the ECB also has put limits on this. Okay, it wants to spread out its bond buying, and it has these capital keys. It can't buy too much of a specific bond, okay? Making it a bit abstract, but these are questions on the agenda. First of all, will the ECB changed its capital key rules? That means now it can buy, for instance, more Spanish bonds, more Greek bonds than before. But this has political problems. You don't want the ECB directly supporting those governments with moral hazard or picking winners in markets or things like that. We might see some small changes, but I'm not sure this will happen. But basically, if it cannot, it might begin having a problem finding eligible bonds. The ECB also buys corporate bonds, which is also a bit problematic politically. I mean, how do you choose which companies to pick? And also here we might have changes. Again, I don't think it'll come now. Another change that could happen is that they will just lower the interest rate from -40 to -50, and then they have more bonds to buy. What I do expect this time is, again, no change in policy, but a hint about potential changes in September. Not a very clear move like we had in January when we heard the ECB told us we will reconsider monetary policy next month. Beware, we will do some kind of change. No, not this time. They'll probably leave the door open, keep it a bit more vague, and this will, in my opinion, keep pressure up on the euro. Okay, so these are the main things that the ECB can do. But there will be also other questions in the press conference. Impact of Brexit. We've already seen the zoo figure. We'll have more figures later on. The IMF predicts that Eurozone economies will suffer. And Draghi will refer to that. He expressed sadness about the UK's decision to exit the European Union. Let's see if, apart from emotions, he'll also offer some fresh forecasts. I believe he'll wait for that for September. Perhaps he'll also put, okay, we'll have a better assessment of Brexit, the Brexit impact by September, and then this will also give us input to act. Okay, so it's not only inflation, it's not only a new forecast, but it'll be also Brexit. Okay, other events in that are other topics on the agenda. Italian banks non-performing loans in Monte dei Paschi and perhaps other Italian banks. It's an ongoing trouble. The Italian government the Italian government wants to use taxpayer money to help the banks, but it's against the EU rules, and there's a clash over there. Now, Draghi personally, as the former governor of the Bank of Italy, might be involved in not taking care of this crisis early on, 10 years ago, 15 years ago. He's Italian, of course. So I think he'll get lots of questions about that. And the ECB here, Draghi specifically, is in a sticky situation. It's more a clash between the Italian government and the other governments, the European Commission. But he'll be asked also about that. I don't know. I don't think he'll provide with. He'll sort of throw the ball back to the court of the governments. But anyway, it'll be a point of contention. He will say, talking about governments, that governments need to do more, not only with taking care of banks, Italian and other banks, of course, Italy. It's not the only place where there are banking issues. Also here in Spain, there's lots of trouble. But also regarding stimulus, remember, when we're talking about negative bond yields, we're talking about, what does this mean? It means that when the government of France, of Germany, of Spain, of Italy wants to lend money in markets, in some cases, investors pay the government to hold the money. This happened last week when in the primary market, not in the market, not in buying and selling bonds, but when the German government issued a 10-year bond, investors paid a negative yield. That means that they pay the German government in order for them to hold the money. And in this scenario, when lending is not only cheap, but is already reversed, you would expect governments to invest money, right? And this is not happening. So he'll urge governments to do more. Another point of contention with journalists and with governments. All in all, to conclude this ECB preview, no changes expected, but big hints about changes in September are on the cards. Brexit dependent, bond buying dependent, inflation forecast dependent. I believe that Draghi will try to weigh on the euro. The impact will probably be relatively limited. Unfortunately, in the last Draghi shows, the impact has been limited. And perhaps the fall of the euro that we're seeing right now, let's take an updated look. Well, it's not such a big fall, but I would say that if we have euro dollar sliding a bit more during tomorrow's morning session, then I would expect, wouldn't expect to extend the falls too much, even if Draghi is dovish. He would need to be extremely dovish to push it lower. Or on the other hand, if he says business as usual, everything is hunky-dory, then I believe the euro could bounce back up. But markets are expecting the ECB to react to the situation of less bonds to buy, risks to inflation, Brexit, and to keep the door open for more stimulus. Oh, one thing I did not mention up to now regarding the ECB, but it's quite obvious, the ECB's QE program is due to end in March 2017. Nobody believes it will end then. It's only 8 months away. So the ECB will probably also, not now, probably in September, announce an extension of at least another 6 months. That's sort of taken for granted, priced in by markets. Okay, so that's the ECB preview. And now we'll do a preview for an event moving from Thursday to Friday. We have a special event in the United Kingdom, which I believe will be a huge market mover for the pound and perhaps for other currencies. We have a special release of purchasing managers indices PMIs on Friday at 8:30 GMT, the regular hour of British releases, of PMI releases. But this one is extraordinary, okay? We have market. In the UK market, this organization releases PMIs only at the beginning of the new month and only final ones, okay? So usually we have manufacturing PMI on the first day of the month, first work day of the month, and the next day we have construction, and on the third third business day of the month, we have services. This time, because of Brexit, a word I mentioned so many times because it's really a unique event, we'll have a special preliminary one-time report on Friday. This will be the preliminary release for July, released, of course, before the end of July, released on July 22nd on Friday. And it'll be both the manufacturing and the services PMIs, okay? Not the construction, as far as I know. So both figures are released at the same time. We should focus more on services because it's a much bigger sector. Of course, in the manufacturing sector, they actually do stuff, but services is so huge in the United Kingdom, especially financial services, that we should focus on that, okay? Both figures are expected to plunge, to drop, like we've seen already with the construction PMI, under 50 points. 50 points is the threshold separating contraction and expansion. Let's look at the calendar, see if it's listed. Remember, it's a special one-off event, one-time event. So let's see. Yeah, so it has been added here to the FX Read calendar, of course. It's 10:30 my time, 9:30 in the UK, 8:30 GMT. So in the manufacturing sector, we're expecting a small drop. Well, a big drop, but just a bit under contraction territory, from 52.1 to 49.4. Okay, and in the services one, which I believe is more important, well, we're expecting more of the same, 52.3 to 49.5. Okay, now these are, of course, significant falls, but to contraction, but not devastating, not a big contraction, okay? And if we have some political stability, some more clarity about Brexit, these figures could rise back up. Why is it important? And I believe they can fall even further because they've been taken at a time of shock. Most of the data has been collected, I believe, before the new government has been sworn in, before Theresa May took office, which was sort of a relief for markets. But in any case, there's lots of uncertainty. If we'll have a bigger fall than expected, especially in services, I believe the pound could tumble back down, even if it's a really bad figure, perhaps challenge the lows of 128.50 or 127.90 even. If we have more or less just under 50, weak contraction, modest contraction. It could be sort of as expected. I mean, we'll have a big shock, lots of choppiness, but eventually, I don't think we'll have a different direction for the pound. Still be waiting for the Bank of England. And if we have, of course, above 50, it'll be a really, really positive figure. It means that both sectors, manufacturing and services, or again, focus more on services, both of them are resilient to the Brexit shock, are looking good, that the UK economy continues working, perhaps not on all engines, but on most engines, and things are looking positive. This is a big event not only for markets, which always look at PMIs, but also the Bank of England is looking at it. We heard a promise last week from the BOE. They said we're not doing anything now, but on August 4th, when we have the quarterly inflation report, when we'll have more data, we will loosen monetary policy. And they will not have much hard data until then. Okay, hard data at least for July, for post-Brexit. We'll have data for June, which is 3/4 pre-Brexit. But this figure, very highly regarded number, these numbers, these PMIs, they could have a really big impact on the pound. So I believe that if we'll have a really positive number, let's say it remains at 52, we could see pound dollar once again moving towards that high of 134.80. But if it'll be really low, let's say 47 or below, then perhaps we'll have a drop towards the lows of 128.50. Anyway, I think it's a huge, huge event. For many reasons, it has been sort of announced as a special event. It's 2 PMIs at the same time, and it's critical for the Bank of England. So this is a really, really big event, okay? Okay, so we did a preview also for that. And the last preview for today, we'll do the preview for next week's events, and then we'll wrap up the show as usual. So this is a preview for the week of July 25th to July 29th. The last week of the first quarter is always a busy one because of GDP figures, but they're not the only ones. Okay, so on Monday, we already have, usually Mondays are quiet. This time we'll have the German IFO business climate. Germany's #1 think tank, more important than ZOO, can give us a better indication of the impact of Brexit on the old continent. On Tuesday, US new home sales, which are more important than existing ones, and consumer confidence at the same time. Wednesday is a big day for markets. For those who are trading the Aussie, we'll get to know more or less if we are expecting a rate cut or not because of the Australian inflation figures, released only once per quarter. In the UK, we have the initial release of Q2 GDP. Remember, Brexit only happened in the last week of the quarter, but the impact of the referendum, the uncertainty, was felt throughout the quarter, and we're expecting sort of weaker growth than Q1, still growth, of course. Also on Wednesday, US durable goods orders, top tier figure. Investment is eyed. It's the last, it's for June, the last month of Q2. Will have an impact on GDP. And of course, the Fed decision, the main event for the week. No changes expected, be it Brexit or be it the weak jobs reports for May and April. Remember, June was already really good. Anyway, no rate hike is expected. We might get some hints about the future moves. My prediction is that we will not get a rate hike before the US elections, and perhaps not until the middle of next year. Anyway, there's only a statement, no press conference, no new forecasts. Their views about inflation, employment, impact of Brexit, I'm sure it'll appear on the statement. And other international developments, this will be interesting to watch. And I believe we'll have a unanimous decision for no change, no hawks dissenting this time. Okay. On Thursday, we have German inflation figures and also from other countries. But it'll be a bit less important just 1 week after the ECB, could still move markets. And on Friday, we have the Japanese rate decision. I believe it'll be a big disappointment coming 2 days after, or 36 hours after the US one. Perhaps we'll have the announcement of more stimulus, helicopter money, more QE. This could push the yen lower, of course, but I believe there's a good chance for the Bank of Japan to disappoint once again, like they did in April. We'll talk about that, of course, next week, more in detail, but That's Friday. We also have Eurozone GDP figures from several countries. They'll probably overshadow the inflation figures, which come again 1 week after the ECB. And to close the week, we have Canadian GDP. That's a monthly release. And this time it's for the month of May, not that important. And of course, the main dish to close the week is the US Q2 GDP. It's the first release, okay? There are always big surprises there. Growth in the second quarter is expected to be much stronger than in the week Q1 and Q4, something like 2.5% annualized. We'll talk about that more next week, but this is certainly a big event. It'll become even more important if the Fed does not rock the boat. Anyway, there are 3 releases in the United States. This time, I think we also have revisions for the past year or so it could be a bit more choppy, a bit more mixed. Anyway, that's a big event coming up. Okay, anyway, focus next week on the Fed decision, US GDP, Japanese rate decision, very busy week, Australian inflation, really lots of interesting figures from all over the world. And I know it's summer, many people are on vacation, but markets are certainly not in vacation mode, okay? So that completes the preview, and I will reach the wrap up, but I see a few questions. I see a question here. Do you expect the RBNZ to show? RBNZ show tomorrow has been called to prepare for an August cut. I'm not aware of what show you're talking about. Let me check out the chart, the calendar, sorry. I believe that these macroprudential tools that they've announced, they should the economic assessment. Okay. Hi, Jax. Yeah, economic assessment. Yeah, extraordinary. I didn't know it was extraordinary. Thanks for the information. Must say I didn't follow that very closely. Anyway, thanks, Luca. It comes out at 9 p.m. GMT tomorrow, Thursday. I see. Yeah, it should be a market mover. It'll come out after we had inflation figures earlier this week. They could provide a big hint, especially with macroprudential tools. They could give us a hint that we'll have a cut in August. But I'm not sure they'll be fully committed. Okay, so I think that, yeah, if they'll express worries, of course, it means a rate cut, together with the macroprudential tools for the housing sector. But I'm not sure they're in a rush. Sometimes they want to keep their powder dry, so they might postpone it as much as possible, this rate cut, especially after the Kiwi did fall quite a bit. Okay. All right. So this is the wrap up for the live market open for July 20th. Turbulence is back, worries are back. Basically, what's going on in markets, uncertainty about Brexit once again. We had some political certainty last week. That's gone. We still don't know what's going on. We had the IMF slashing growth forecast, not only for the UK, but for the whole world. US dollar is stronger on better than expected data. The yuan is weaker. They're taking advantage of the global focus elsewhere and, well, the strengthening of the greenback to devalue the yuan. This is worrying for other countries. Other news, Turkey is back on the back burner, but who knows when it's going to come back after this failed coup attempt and the aggressive clampdown that followed. Donald Trump is now the official nominee of the Republican Party for presidency of the United States of America. Next week, we have the Democratic Convention. So far, no market impact. More impact should be seen closer to the elections. Other than that, last week we had the Bank of England not cutting interest rates, but they do intend to act probably on August 4th. Elsewhere, retail sales is one of the biggest market movers for the US dollar, helped it move forward. Oil prices are sliding once again. The Reserve Bank of Australia is ready to ease. That's weighing heavily on the Australian dollar, and the Kiwi dollar is suffering once again. Looking here at charts, we are seeing the stronger dollar seen even in the very stable, the frustratingly stable euro, sliding under 110 at the moment, waiting for the ECB's decision on Thursday. 109.60, 109.05 are support lines. Resistance 111.30, 111.90, much stronger, 112.50. Pound dollar gradually grinding its way down. Of course, 130 is support, 128.50 is lower support, 133.50 is high resistance. More data today, but the biggest event is on Friday. Dollar yen continuing its move higher on expectations for helicopter money. 107.65 is the next big level to watch. Support at 105. I suspect that the Bank of Japan could disappoint next week, but currently weaker yen, and the yen does not, for change, taking a pause from those safe haven flows. Dollar CAD moving higher, related to the fall in oil prices, sort of hanging just above the lows in oil. That means dollar CAD is back to the high range between 130 and 138, 130.80. High resistance 131.40, support 129.10. Aussie dollar looking lower on rate cut expectations, 74.76 at the moment. Support 74.40, 73.75. Resistance 75.30, 76. And the Kiwi dollar ending its honeymoon, already looking to fall below 70. 70.50 is some kind of resistance, not that strong anymore. 71.50 is another line of resistance. 69.50 is support. Okay, on the agenda today, it's a light agenda. UK jobs report, a bit old, a bit stale, at 8:30. Should be more or less similar to last month's reports. Eurozone consumer confidence and oil inventories, perhaps the most important event for today. Let's see if the pressure is on for oil prices. Tomorrow, much bigger events. Retail sales already could reflect some Brexit-related moves, and the ECB's rate decision. We had a long preview for that. Basically, no changes expected, but we might get significant hints for a move in September because of Brexit, because of no success on inflation, and because the ECB has less bonds to buy. No changes expected at 11:45, but the Draghi show, the press conference at 12:30 GMT, is a huge event. Also, other figures tomorrow in the US, more second-tier figures, and on Friday, Eurozone PMIs, which should be interesting. But the most important thing is the special PMIs for market. We also had a special preview for that. And these are expected to show that the UK economy, at least in the month of July, at least according to the preliminary figures for both services and manufacturing, that we're back to contraction, that the Brexit shock has a significant impact on business confidence. And for those trading the loonie, we also have retail sales and inflation at 12:30 GMT. Okay. So that's it for the show for today. 3 previews, 1 wrap-up, lots of information to discuss for this week and next week. I'll be here again next Wednesday, same time. Of course, talking about the Fed next week. And that's it. Follow other live events on FX Street. I wish everybody a safe and successful trading day today, and see you next week. So that's it. Thank you, and bye-bye.